What's up, guys? I hope you guys had a spectacular day. In today's video, I'm going to try to make things very nice, short, and sweet and simple. All right, so without further ado, let's get started with the video. Number one, we have PCE data coming out tomorrow morning at 8:30 prior to the market open. Then at 9:45 a.m. we have PMI data, and then at 10 a.m. we have more news coming out. So once again, during 9:45 a.m. and 10 a.m. we should not be holding on to any positions. All right, it's very risky and it's very dangerous. Essentially, anything can move, and we could see a big spike up or down. So it's not worth holding on to anything like that. First and foremost, let's just go ahead and take a look at the SPY. All right, so essentially, I'm holding on to lotto puts overnight, and I have a few reasons for it. Number one, I think PCE data is going to come out worse than expected. It's going to be bad, right? Number two, just from a technical standpoint, this is not a very bullish candle. All right, so clearly, we gapped up, things looked bullish, right? But now we made a red candle here, right? Technically, this does not really look too good. And the other reason why I wanted to go short is the IWM was also showing a very, very big red solid candle like this at a level of resistance. So in hindsight, we probably should have just went short the IWM, but we went short the SPY, given that the IWM has an influence on the SPY. So this is not a bullish setup at all on the IWM. So I'm expecting more downside. Even though we have news coming out tomorrow morning, I do think that there should be some sort of a drop, right? We have a move upwards in the after hours, and generally when we do this around these levels, because right now the SPY is moving up in the after hours, things are going to seem like they're bullish, right? But usually when this happens, when the IWM is also showing weakness, when there's a reversal candle here on the SPY, it should be a very good opportunity to go short. But of course, with PCE data coming out, it's not 100% guaranteed. But, I like our chances. So now we could take a look at the NASDAQ. One of the things here that's been a theme for the past few years now is when the charts look extremely bullish or bearish, they don't usually maintain themselves and they don't usually continue up. So you remember yesterday, the NASDAQ's MACD was pointed lower and we gapped up very heavily, right? Today, we moved just a bit. You can see that the MACD has curled just a bit here and we gapped up again, right? So the fact that we are gapping up without even crossing above yet on the MACD, because usually when we cross above, then we should have 2 days, 1 to 2 days where we continue to either be neutral or bullish on the stock. So the fact that this hasn't even happened yet, we haven't even crossed above on the MACD, and the NASDAQ is breaking above, and it closed and broke above its recent highs, that is extremely bullish. So the fact that basically if the MACD is moving very, very tiny numbers, right? But the NASDAQ itself and the stock price is moving extremely heavily, this should not really be sustainable. Because so this is what I'm looking at. So essentially, you see how small of a move this was. Basically from 1.31, look at the number on the right here. 1.31 right here, 1.21 to 2.49, right? We gapped up from 307 to 315, right? If the freaking MACD on the NASDAQ started moving up like this, right, at this same tenacity, then the NASDAQ would be at like 350 by Monday. So that's obviously not going to happen. And that's another reason why it makes more sense to try to be bearish, because like this strength and this explosiveness in the MACD, I don't think is going to maintain itself. And yeah, I would be very, very surprised, especially given the fact that this happened right after a big rally. This is technically a really good setup to go long, but it's way too strong. It just doesn't feel right that we would. But of course, you know, that's why we're holding on to a lot of those, and the contracts are only about $60 each, so it's not going to be huge. But yeah, that's my thought process for that. The other thing that I was also looking at, I'm going to show you guys that right now. So I also like to look at the chips as reversal candles as well. So today we can see that the AMD has a big doji like this. Usually when it has a doji at levels of resistance, it's a good sign that it shouldn't continue up. So what is most comfortable to see is if AMD and Nvidia have ugly doji candles like this. So far, unfortunately, today it was just AMD, but usually Nvidia also has doji candles, but you can see today Nvidia still technically looks very bullish. And same concept here. The MACD, we're gapping up, and the MACD is barely moving upwards. So this is very, 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 very bullish. And from a MACD perspective, it's almost too bullish. Does that make sense? It's way too bullish. It doesn't make sense for it to be this strong. The MACD barely moving higher, but Nvidia's price is jumping, right? So that's why I'm saying if we're going to end up moving like this, right, then Nvidia is going to be above 310. So once again, it just doesn't really make sense that there's that much strength in the market at the moment. So what they usually do is they paint a very, very bullish picture like this. Almost every single time in the past, we've had extremely strong setups where we have sensitivity. Where we have like sensitivity on the MACD and the price moving upwards, etc., etc. It almost never works. So a lot of people are starting to become bullish. I'm sure many people are starting to become bullish. Technically, from a technical standpoint, this is a bullish setup. We closed above a major level of resistance, so it makes sense to try to go long, right? But it's a perfect opportunity for them to rip it down lower. And especially tomorrow, JP Morgan's Collar trade is going to close, and they sold the call side for 40.65. So they're expecting the market to remain below 40.65. So it's another good opportunity to basically be short, right? And I guess, you know, a few days ago I was saying it looked like 40.65 could be acted as a magnet, and it looks like that's exactly what happened. So that's something that we're gonna have to take into consideration moving forward next time. So the next quarter, if for example we're trading at like 3,900 and JP Morgan's Collar, they sold the calls at 4,100, right? We should expect that the market can get a bit of a rally to that zone, similar to what just happened here. So just keep that in mind for next time. But real quick, I just want to take a look at Microsoft. Microsoft clearly doesn't really look that bullish either. This is also just a reversal candle, if I've ever seen one. This is not like a bullish setup. If we end up gapping up, that would be very, very not normal to see us gap up like this. Google also doesn't look very bullish. You can see that it's hanging from a thread. Usually when something like this happens, we should basically, you know, we shouldn't break back above the 23.6. We shouldn't break back above the highs of this candle here. And this is a bearish setup as well. And then Tesla, we're also having trouble at resistance. Similar. So it's not like, these aren't very, very bullish setups. Let's take a look at Amazon. Amazon and Apple. So Amazon looks bullish, right? It shows above. Apple also looks bullish. It's closed above as well, right? Same concept with the MACD, right? It looks like Apple is ready for an explosion to the upside, but just technically it doesn't make sense for it to happen, and this move should not be sustainable. And you can see that they're basically just keying off of the NASDAQ strength. So yeah, this was basically just some sort of an analysis on the MACD. Usually, I'm telling you guys, this setup on the MACD, everything that I was showing you guys, it should be falling lower. It should not gap up. We shouldn't have a big move to the upside. I would be shocked, but that's why they're lottos. And the PCE data coming out tomorrow morning doesn't really help this setup either. But yeah, it doesn't make sense. The JP Morgan collar, the MACD, the reversal signals on the chips, well, AMD, Microsoft, Google, and yeah, I mean, it just doesn't make sense. Oh yeah, sorry. The last thing I want to take a look at was the VIX. So the VIX is also holding support, and that was basically another reason why. So 18.5 and 18 are major supports on the VIX, and the VIX is still holding support very, very well. Are we going to expect capitulation in the VIX? Because that's the only way that the market is going to really skyrocket. When the VIX is having this much trouble falling lower, it makes me worried to be bullish, right? What I want to see, if we're bullish on the market, right? Because we know that the VIX has an inverse relationship to the market. So the VIX goes up when the market goes down, right? So the fact that the VIX is having so much trouble falling lower means that there should not be that much more upside potential to the market, okay? So with all of that being said, with all of those different factors, that's why it made sense, in my opinion, to lean short overnight and get some lotto puts. All right, so I hope you guys enjoyed today's video. Make sure to like, comment, subscribe to the channel if you haven't already, and tune in tomorrow morning for our live stream option trading. Thank you so much. Have a good one.